Welcome. Today, we're diving into the latest technical analysis for Enphase Energy, Inc., ticker ENPH, as of December 11, 2025. The stock has caught the attention of traders with a strong recovery, closing at $32.79. But is this just a short-term rally or the start of something bigger? We'll break down the trends, indicators, and what they mean for your trading strategy. Let's start with a broad overview of ENPH's current technical landscape and set the stage for a detailed analysis. Despite the recent bounce, ENPH remains in a long-term downtrend. The stock is still trading below its 200-day simple moving average, which currently sits at $41.55. This is a key indicator for institutional investors and signals that, from a big-picture perspective, the bears are still in control. However, the recent price action suggests a possible shift in momentum, so it's important to keep both the long-term and short-term trends in mind as we proceed. Zooming in, ENPH has shown strong short-term recovery momentum. The price has reclaimed the 50-day simple moving average, closing above it at $32.79 versus the SMA 50 at $32.36. This is often seen as a bullish reversal signal for traders focused on shorter timeframes. The ability to break above this level suggests renewed buying interest and the potential for further gains, at least in the near term. On December 11, ENPH posted a daily return of 3.93%, closing near its high at $33.29. What's more, trading volume spiked to 7.26 million shares, up from 6.85 million the previous day. This uptick in volume confirms that the price move is backed by real buying power, not just a fleeting uptick. Volume is a key ingredient in validating breakouts and trend changes, so this is a positive sign for bulls. The recent price action marks a breakout from the consolidation zone that ENPH experienced in early December. Consolidation periods often precede significant moves as traders wait for a clear direction. Now, with the breakout confirmed by both price and volume, the stock is entering a new phase, attracting momentum traders and short-term investors. ENPH's price is now above the 5-day SMA, $31.52, and the 20-day SMA, $28.96, in addition to the 50-day SMA. This alignment, where the price is higher than all these short and medium-term averages, creates a bullish setup. However, the 200-day SMA overhead remains a significant resistance level that could cap further upside unless the rally continues with strong momentum. A bullish crossover occurs when a shorter-term moving average crosses above a longer-term one, signaling a potential trend reversal. In ENPH's case, the price moving above the 50-day SMA is a classic bullish crossover, often interpreted as a buy signal by technical traders. However, with the 200-day SMA still above, the overall trend remains cautious. The Relative Strength Index, or RSI, is at 61.67 for ENPH. This places it firmly in the bullish zone, but not yet in overbought territory, which is typically above 70. A rising RSI suggests that buying momentum is increasing, but there's still room for the stock to move higher before it becomes technically expensive. This is a positive sign for those looking for continued upside. The MACD, or Moving Average Convergence Divergence, is currently negative but has crossed above its signal line, minus 0.837. This crossover is a classic buy signal, indicating that bullish momentum is building. The MACD histogram is also expanding positively, further confirming the strength of the current move. While momentum is strong, some caution is warranted. The stochastic K oscillator is at 85.14, which is in the overbought zone. Even more extreme, the stock RSI is maxed out at 100. These readings suggest that ENPH has risen quickly and could be due for a short-term pause or pullback as traders lock in profits. ENPH's price has closed above the upper Bollinger Band at $32.61, with a %B position of 102.48. This is a technical breakout, showing extreme strength. However, trading outside the bands is statistically unsustainable for long periods, so a reversion to the mean is often expected after such moves. The Bollinger bandwidth is relatively tight at 0.252, but it's starting to expand. This expansion often signals the beginning of a new trend phase as volatility increases and traders position for bigger moves. Keep an eye on how the bands continue to widen in the coming sessions. The Chaikin AD oscillator, ADOSC, is positive at 1.76 million, indicating that buying pressure is accumulating. This means more money is flowing into ENPH, supporting the recent price recovery. While the on-balance volume, OBV, remains negative over the longer term, the short-term indicators are aligning with the bullish price action. Despite the positive short-term money flow, the on-balance volume remains negative at minus 175 million. This divergence suggests that, while recent buyers are active, the longer-term trend of money leaving the stock hasn't fully reversed. It's a reminder to stay cautious and not ignore the bigger picture. A linear regression model predicts ENPH's price at $27.75 based on recent trends. The current price of $32.79 is trading 18.18% above this trend line, suggesting the stock is statistically expensive right now. This deviation increases the risk of a pullback, as prices often revert to their mean over time. ENPH closed above its pivot point at $32.43, which is a positive technical sign. Immediate resistance is at $33.65, while the major long-term resistance remains the 200-day SMA at $41.55. On the downside, immediate support is at $32.36, SMA 50, and $31.57, with the 20-day SMA at $28.96 serving as a critical medium-term floor. The most important price zones for traders are the support area between $31.50 and $32, and the resistance targets at $33.65 and $35. These levels are likely to attract significant trading activity as buyers and sellers battle for control. Watching how the price reacts at these zones can provide valuable clues for your next move. Given the current setup, traders might consider buying on dips towards the $32.00 support zone. The initial upside target is $33.65, with a stretch goal of $35 if momentum continues. However, it's crucial to use a strict stop loss below $30 to protect against a false breakout or sudden reversal. With oscillators in overbought territory and the price above the upper Bollinger Band, risk management is more important than ever. Traders should be prepared for potential pullbacks and avoid chasing the price higher. Setting clear stop-loss levels and position sizes can help protect your capital in volatile conditions. Current holders should watch for signs of exhaustion, such as declining volume on up days or reversal candlestick patterns. These can signal that the rally is losing steam and a correction may be near. Staying alert to these warning signs can help you lock in gains and avoid sudden losses. To wrap up, ENPH is showing a robust short-term breakout within a longer-term downtrend. The technicals are mixed. Strong momentum and buy signals are balanced by overbought warnings and resistance overhead. The best approach is to stay nimble, use disciplined risk management, and watch key levels closely as the next chapter unfolds for ENPH.